Hey, good morning, everybody. So we're going to bring in CPI live in 5 minutes, but let's talk about how that's going to affect you and me today. Well, the first thing I want to bring up is Spot Gamma. Spot Gamma said that SPX call open interest is under put open interest for the first time since January of 2022. So let's think back at what happened in January 22 when we were at all-time highs in the market and then it went over and down. We also noted that both SPX put open interest and VIX call open interest is at record highs. So when VIX open interest, it means that there's either a lot of people hedging against a downturn in the market, or people are just betting naked on a downturn in the market. Again, SPX call open interest is less than put open interest. Generally, the put open interest is less. So, what else is happening? So, the reason I don't play earnings, why don't I like to play earnings? Give you an example right here. Twilio down 15% after posting Q1 earning results. Well, how bad were their earning results? 47 cents they earned versus 21 cents the estimate. So they beat by 100%, yet they're down like 17% this morning. Well, shit, let's look at Upstart. Upstart's up 40% this morning. They must have crushed earnings. No, quite the opposite. Upstart's earnings were extremely disappointing. So how is it up 40%, Matt? It's called a squeeze. So many people were short Upstart that they're squeezing and they're buying and they're pushing the price up. So another reason I don't like to play earnings, because you could beat and your stock could go down. All right. I think Airbnb beat, but probably gave terrible guidance because I think they're down 11% as well. And we'll talk about stocks, but let's talk about what to expect. We've got CPI information coming out in 4 months. So what do we know? Okay. April month over month CPI, okay, was up 0.4%, previous 0.1%. April month over month core CPI was up 0.4%, and the estimate was 0.4%. So we're really going to be focusing on the core. Now, April year over year estimate 5%. The core came in at 5.5%, and it was previously at 5.6%. So again, we're really going to focus on the core this morning. Again, we're 3 minutes out from that. Those are your expectations. Now, JP Morgan dropped something out, and they're like, if this is your number, here's what you can expect in the market. It's kind of their playbook. I call bullshit, because if you look at JP Morgan versus what they said, the last couple of CPI prints, they've been wrong. So let's talk about what happened last CPI print. For those that don't remember, we came in line with expectations. What happened? Market ripped higher and then went down. All right, so please prepare yourself for anything. If you're a bear, that's one thing. If you're a bull, that's one thing. Let's talk about the potential or where we could see the SPY going to. So I brought up the SPY chart. Let me just get down to it. Okay, we're sitting at 410.51. So key levels of inflection. I have the 30-minute chart, which takes us back to the end of April. Why is that important? Because you're talking about some key numbers. So 410 is going to be a key spot right there. And then you're going to go down to 408, which is probably right at the bottom of this line right here, 407.99, 408. So I'm saying to myself, if the market doesn't like the CPI print and it goes down, I would first look for support right at 410. If we don't find support at 410 and we break under 410, you see a number like 409.42 on the SPY, I can tell you, almost guarantee you, that in my opinion, we're going down to the 408 level. Now, the same is true on the other side, and we'll look at the dark pool levels using Discord shortly, but we're looking at the 412.32 level, 412 right here, 32, right about here. If we break this level, then 414 is in play. 14 being right here. Understand, there are ghost zones above 414 and below 408. So if we happen to break one of those zones and the market is bullish and we're going much higher, and you see 414 getting broken to the upside, then you will see 418. Vice versa, on the downside, you see 408 get broken on the downside, which should act as some good support. Then what's going to happen? We're going to drop down to 404. All right. With that said, I think we've got stuff coming up. I'm sure we'll add it to the stream, or we'll turn on the volume and add it to the stream as soon as that information is released. We're probably a minute and a half away, so we can just talk about a couple other earnings that came in, and I'll let Carlos throw it on the screen. So again, Twilio's off 17.5%. Rivian's up 7% this morning. Affirm is off 7% this morning. You've got Airbnb now off over 14%, 14.5%. And again, Upstart pushing 38%. What would I do with Upstart? Well, I definitely went day playing puts today on Upstart. I would wait and let things play out a little more. Again, a squeeze could happen for 3 or 4 days. We were looking at the squeeze on Shop. Remember, 1, 2, 3 days straight up. I finally entered into some puts. I secured profit. I re-entered those puts, saving myself, 23% on the downside as it came down. So I sold up here, knowing that I was going to re-enter. Did I grab the best re-entry spot? No, but I saved myself 23%. I took profit, saved 23%, re-entered. All right, so it's 8:30. Let's get this on the screen.
CPI number. Rick Santelli has it. Rick?
Let's share it.
Yes, our April read on the Consumer Price Index, headline number expected to be up 0.4, is up 0.4. High watermark there was up 1.2. That was back in June of 22. If we look at ex-food and energy or core, it is also expected to be up 0.4, and it is up 0.4. High watermark there. Well, that was up 0.8 in April of 21. And if we look at the year-over-year numbers, 4.9 on year-over-year headline.
Light.
It has gone down every month since 9.1 extreme in June of 22, which was the extreme since 1981. And if we look at core year-over-year, 5.5 exactly as expected. And the high water mark there, 6.6. That was in September of last year, the high of 1982, to go back that far. And that is where the stickiness is. There isn't sticky in year-over-year headline. The stickiness is in the core. If you just look at the last 3 or 4 months, we have 5.5 this month, 5.6 last month, 5.5 before that, 5.6 in Jan, 5.7 in D's. Then in November, you're at 6%. That's where the drop-off started. So there's the congestion. But the markets are weighing in very quickly here, panel. Rates are moving down. 2-year rates are moving down. They're at 395. They were at 405. They're down 10 basis points. We're down about 5 basis points in a 10-year. And we've rallied nicely in the pre-opening Dow futures, now up 100 points. So the market is speaking, and it certainly doesn't seem to be bugged at all by the year-over-year core. Panel.
You got that right, Rick. Let's bring in some of the rest of our panel for some instant reaction to that number. Tyler, what do you think? That was not hotter than expected. In fact, in some cases, a little weaker, even the year-over-year, if you're looking at the headline.
All right. Let's remove them. Yeah. So, I mean, I was expecting 5.0 right in line with estimates. It came in a little cooler at 4.9. And then you heard him talking about the market's reaction. The US dollar going down, the 2-year going down, the 10-year going down. Those are all showing strength for the market. You could be more bullish. As interest rates go down, you would expect, okay, companies that have to refinance, it's cheaper to invest in the market because most accounts are marginalized or levered. It's cheaper. So, however, the bank, I can't get over the banking situation. So when I'm looking at it as a whole, if banks, even with the cheaper interest rates, with the rates going down, I don't see banks speeding up, picking up, making loans more accessible. In fact, they're going to contract. Contract means recession. It means less money for small business. So as a whole, if the market wants to ride higher off these numbers, that's fine. Me, I'm going to sit back. I'm going to wait for resistance. So I'll talk about my strategy for today, and we'll talk about the SPY ranges. And the SPY has gone from anywhere from 0.5% up pre-market, 412.50 we probably went to, and we probably rejected that. Let's keep in mind, 413 was our rejection all throughout the week. 412.50, 413 was top. Last week we were 414.87. So these are really the numbers. If you want to convince me to be bullish on the market today, okay, I need to see the SPY support the 415 level. But let's specifically tell you about one play I'm looking at. Let's bring up NVIDIA. All right, NVIDIA or AMD, they've been ripping higher. I'm looking at NVIDIA. Why? Because NVIDIA has been off the hook. So I'm saying to myself, I'm definitely not following NVIDIA. But if I see NVIDIA break 290, then it could clearly go to 300. Now, I made a post the other day that I think NVIDIA is overvalued. So for me to take a stance like that, you break 290, you're going to 300. I get it. Okay. I won't fight that. I won't be on the sidelines. However, we break, what are we at? I got to find out. Where's my NVIDIA thing that I did? Sorry. Give me 1 second. I might have deleted it. Okay. Yeah, I guess I deleted it. I've got my positions, talked about the banks, Fed Williams talking about raising rates. So one thing I'm going to pay attention to today is going to be the Fed funds rate. So I'm going to wait till the market settles down, meaning it's processing this information. That's what we do. We let the market process the information. We see when volume enters the market. Now, again, we're just pre-market, okay? So you see all these earnings calls and you see stocks ripping higher, ripping lower, and you say to yourself, okay, that's easily going to continue. No, once big money gets into it within the first 10 minutes of the market open, you'll see the true valuation of what these companies can do after earnings. But again, let's go down to the SPY, and then we'll bring up Discord, and then we'll do that. So here we go. Look at the SPY. Let's see where we are pre-market. Okay, not a surprise. 412.55. Now let's remember, yesterday we spent most of the day range right at 411.55. Okay, every time I made a posting on Discord, I'm like, oh, we're at 411.55, 411.55. So again, I'd be looking at the 413 number right here that it would reject. If we spike when the market opens and we see 414, I'm really looking for 414.90. What was it? Let me just go back here and open this up. Let's go back. What am I going to do? Use my chart from last week that I drew out that had 2 weeks. So high of the day last Tuesday and last Wednesday, 414.82. Wednesday, 414.86. Okay. The Monday, 417 that we came down from. The Friday before, 416 was the high. So again, 416, 417, 414.82, 414.86. So I'll actually look at the dark pool levels. When I've got my last 2 weeks plus the first 2 days of this week, what will you see? Well, as I told you on Monday, we did 50 million volume on the SPY. It was the lightest day of the year. What did we do yesterday? I think we did 49 million. So when you go back the last 365 trading sessions, the last 2 days have had the second and the seventh lightest volume days. Okay. So that just tells you how much money is on the sidelines right now. Okay. So understanding the money is on the sidelines. Now, does it rush back into the market off today's CPI number? So that's what I'm asking myself. Hey, there's $5.3 trillion on the sidelines. The number of the print for CPI came in light at 4.9. Most estimates were 4.9 to 5.1. 5.1 would have been hot. JP Morgan happens to think 4.9 means the market's going to rip higher 1.25 to 1.5% today. So that would be what, 5 to 6 points. We closed at 411. You're talking about 416, 417. So JP Morgan gave you their playbook, 416, 417. I gave you my playbook. If we rip past 415, we're going to touch 418. So if someone like me, who is a bear, who doesn't want to be a bull, sees the market cross that 415 plateau, let's say 415.50, it might be at 2 p.m. in an extremely bullish day. If I see that at 2 p.m., then I will ride into calls. Now, here's the catch why the market could pump and dump if you want to be a bear like myself. As we close out Friday, as we entered yesterday and Monday, the day before, there were calls being purchased with this week's expiration. So leading into the CPI print, as we saw yesterday afternoon, where the market finished bullish, right? We touched 410. Let's just go back to the 3-minute yesterday, right? We touched that 412, shot down in anticipation, 410. Let me just add this to the screen so you guys can see exactly what I'm looking at. I'll do a smaller version. Right here is a 411, right? And we're going up to what? 411.67. We kind of rejected the 411.70. When we made it higher, it was 412, 412.25 was the high point yesterday. So looking at it again, pre-market, I'm seeing 412.51. So again, I want to know what ranges I want to pay attention to. So what would I do? Well, oh shit, I keep doing something that I'm not supposed to. Let's stop sharing that. Let's get over to Discord so we can look at the dark pool levels. Why are the dark pool levels important? I've mentioned this a number of times. Everybody looks at the volume traded in the market. Doesn't matter for whatever stock you are. Understand, over 50% of what's traded in a single day happens in the dark pool. So if you say monetarily the value traded in the market is $18 billion for any given day. Let's just say it's 18 billion. You have to understand 18 billion, if not more, is traded in the dark pool. Now, why would they trade in the dark pool? Imagine you're trying to get into or out of a large position in Tesla. You're looking to buy or sell 250,000 shares. Well, if you look at the volume on Tesla, if you put 250,000 shares into the open market, Tesla would drop substantially. Now, you don't care that it's dropping substantially. What you care is your exit price is going down. So where you plan to exit at, let's say $187, as you're selling into the market, Tesla's dropping. So that is why over 50% of the volume, what you see in the market, is traded off market in the dark pool. So how do we combat that? All right, we're just retail traders. We're watching the market. Maybe some of you are glued to CNBC. How do we combat all those dark pool trades? Well, shit, you joined someone's Discord. Does it have to be mine? It doesn't have to be, as long as you're getting the information. So what do I like to do on Discord? I go to the flow and algos rooms. Okay. Now, these are your top flow from yesterday. So you can see where they were. Calls, right? Puts on the SPX. I mentioned that to start off this session. Golds, because people were worried about interest rates. Strong. Meta's up there. Google. Boeing. We saw Boeing had a good push yesterday. On the downside, we're seeing NVIDIA, Apple, Amazon, some of the Qs, Tesla. So I don't think that's necessarily going to change. So what will I do is I will look at some dark pool levels. Okay, well, thank you, because they're right here. So when I mentioned that we're sitting at pre-market, what? 412.71. All right, that's where we're sitting right now. 412.71. Look at the dark pool level with me. 412.76. That's the largest dark pool level of close to 30 billion. I already told you an equal amount of trading happens in the dark pool that happens on the open market. So you're seeing 412.76, and we can say plus or minus 10 cents, 20 cents, so almost 413. Okay? So when I'm saying this could act as rejection, even though the markets are strong pre-market, and here we are right at 413 pre-market, and I said plus or minus, 10, 20 cents, you're talking about 412.76. Now, if this turns into support, if you see the market come down and go to 412.50 and 412.50 gets hit with a lot of volume and it bounces higher, then you're going to say 412.76 is support. If we go higher, you have 414.14. Smaller level, 415.52. I would look for a rejection. If we pass 415.52, like I said, 415.50, right? You're over that number. And we break through, small dark pool level, a ghost zone, and then we're at 418. So again, your bull case scenario is we pull back. Maybe you see 412 on the bottom side and you see 418 on the top side, and the market is up 1.5% today. And it's diverse. It's spread among every industry, is up 1%, 1.5%. The opposite is, okay, you see the movement pre-market. You know that a lot of the money's on the sidelines. You know they were selling into the spike yesterday. So you say, okay, they're not going to fight pre-market. Smart money's not going to fight. If you're looking to sell into this market, what are you going to do psychologically? You're going to let the market go up. If I have a share or multiple shares or hundreds of millions of shares, whatever it is, and I want to sell, and I'm looking to sell in pre-market, it's $58, and I'd love to sell at $60. Why? Because I just made another 4% today. And the stock is riding up. I'm not going to interject pre-market and go, let me take my profit. These banks, these institutions, hedge funds are extremely smart. What are they going to do? They're going to let it ride up until they finally see rejection. When they see rejection, they're like, all right, time to jump out. If you're in a plane and you're going up, 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 you're not getting out until you start to take a nosedive. Me, I like to get in early. That's one of my biggest mistakes. If I could just wait for the top or for the bottom to round and have confirmation, I'd be a much better trader. I made a comment the other day. Would you rather be a good or great trader, but have poor timing skills and poor money management? Or would you rather be an average trader that has great money management skills? Okay? I guess timing doesn't really matter. I would rather be the latter of the two. Why? Because there are times that I'll go in and I'll take 2,500, turn it to 5,000, 5 into 10, 10 to 20, 10 to 20 to 30, whatever, 50,000. By the time I get my last trade in, I'm way over levered. And then I'm back at 2,500 when I just miss one, or usually it's two bad trades. If I have two bad trades in a row. Okay. So we spoke about the bull case scenario. Bull case scenario is the market drops back. you find support right at 412, and it bounces higher to 418. Yes, I think we're going to have a wider range today. Your bear case scenario, because I didn't get to that. So the bear case scenario is, right, you have bullish terms first, meaning the US dollar is dropping, the 2 years dropping, the 10 years dropping, stocks are spiking. They were red futures-wise. Now they're green. People were worried. They're not worried. We came in at 4.9. It's very calm. However, the market's here to fool you and take your money. So I say to myself, okay, well, you're going to sit out the first hour of trading anyway, Matt. So you're going to watch. So what are you looking for? Okay, so if the market is planning on taking your money, what will we see? We see a pretty strong spike. We probably see a spike up to 414. Yeah, something like that, 414. So let's just assume it's going to be a bearish day. Spike up to 414, hold it for a little while until the market starts to sell off. Then we see 412.72 get broken. When that gets broken, we see we're back at 411.55 where we were yesterday. After that, we're back at 410, and we even revisit where we were this morning, which is 409 and change early in the morning. Okay, so your bear case scenario, is we're going to reject whatever it is, 413, 414, 413.86, 414.86, where the high was last Tuesday and Wednesday, just under 415. If that happens, I'm going to look for a 6-point range, and I'm going to say we reject that, and the market's going to throw up on itself. And the bear case scenarios, we're going back right under 410. Okay, so your bear case, go up to 414, 415, 416, and then we drop 6 points, 1.5%. Okay, so I'm not telling you where the top is, 413, 414, 415, 416, and then we drop 6 points. So 416, 410, 415, 409, 414, 408, something like that. Your bull case scenario is we find support very quickly in the day. All right, now what do I look for? Besides for looking at the SPY, besides for looking at the NASDAQ, to see if we have support, I'm looking at individual stocks. I'm looking at Apple. Apple's been struggling for a few days since its pop on earnings. So I want to see what big money is planning to do with Apple today. Simple as that. All right, let's get to some questions here. Okay, Palantir ripped higher the other day. Yes, it ripped higher to 10 or maybe even over 10 after earnings. It was up as much as like 28%. Any dark pools on that is UPST, a meme or a pump or a put play. Okay, let's get to the second question first. I mentioned Upstart. Upstart had terrible numbers, but is squeezing higher. I saw Upstart anywhere from 33% all the way to 43%. So yes, you could get in and make a killing on that if you had a crystal ball. Me, I don't know if they're going to squeeze Upstart to 50%. I thought 40 was kind of high. When I saw 43, I would have been a seller. At 33, I would have been a buyer. So yeah, I'm definitely staying away from Upstart. Now, for those of you, if you follow Upstart, now let's remember when I got into my Upstart puts last time, it was what, $21.50. It went down to 17. It actually went up to $22.50 after I bought my puts. That's going back a few months. So me, even though I thought I was getting great entry at $21.50, it went up a whole dollar, and then I got my puts were down like 30%. They ended up being extremely profitable. So yes, it's all going to be about entry. Let's talk about a squeeze play. When I got involved with shop puts, shop squeeze for 3 straight days. Imagine getting in puts the first day. How screwed would you be? So usually I have a 3 to 4 day rule, meaning if something's squeezing and it wants or warrants my attention, I'm going to watch Upstart today. Again, it would be too risky for me. Plus, you're going to pay a high IV until the IV settles. If the IV settles down and you want to make a bet on Upstart, go for it. But I would say if it's going down, play the momentum. I wouldn't look for like a reversal, like Upstart's going to go up 20%. Now it's back at 40. It's not that type of meme stock. It has a multi-billion-dollar valuation. A meme stock that can get played from 100%, 200%, something like that, pull back and go back up, usually has a valuation of under 100 million. So when you're looking at these penny stocks, and they don't have to be penny stocks, they could be $1 a stock, but the valuation of the company is only like 15 million. Yes, if there's a ton of short interest, it could squeeze and keep squeezing. And you could be up 100%, back to 20%, back to 100%. Now, something like Upstart, I don't see it going from 40% to 45, let's just say, dropping to 25 and then making it back to 45%. Let's see, Michael, what are you saying, dude? You're a bear this week. Good morning. Make sure you hit that like button. If you guys like seeing me each and every morning, please come back tomorrow, okay? Tomorrow we have PPI numbers. This morning we had consumer numbers. Tomorrow we have pricing index numbers. So it's going to be a major component to what the Fed's going to do. So all these numbers play and the Fed says, okay, inflation's coming down. What about jobs? So we have jobs data coming on Friday. So people that think this is it, the market's going to rip higher. Again, I'm not in that camp. I gave you the scenario. The scenario is 412 on the downside, 411 on the downside. We're going up to 417, 418. There's your bull case. You buy all the dips. The market's getting stronger. That's your vision. Okay, I'm more of a realist. I understand what's going on in the world. I understand these companies' earnings are beating, but the earnings estimates have been lowered substantially. So again, I'm more patient. I'm like big money on the sidelines. Remember, I came from Wall Street. I worked for the hedges. I worked from some large banks, some private money. Anyway, okay. Let's see what we got here, Matt. I don't understand. Banks been struggling, and the second biggest bank went bankrupt, and JP Morgan bought it with the Fed paying, etc. Would that scare the economy? Isn't that a bear scenario? Yes, you're talking about reality, which is banks, and there are a number of other banks that could go under, versus what the market's telling you. And the market's saying, look, any bank that went under, the market saved them. We have Janet Yellen coming out and saying something about accounts over 250,000 should be fully protected by the FDIC. Not sure how that's going to play out. Again, I'm not a banking analyst. I was never a banking analyst. So yeah, one would think bearish. However, when you look at the 2-year, what the market's focused on, and I'll mention the 2-year, the 10-year, the US dollar, making it cheaper or more expensive to invest in our market. As the US dollar goes down, as interest rates go down, more investment into our market. As the US dollar goes up, as interest rates go higher, less investment, things become more expensive. That's your simplest term. But what I'm looking at and what the market is focused on are Fed rate hikes and Fed rate cuts. Well, how does the market know? They go to the Fed funds rate. So you'll look at the end of the year, and you could Google it. Anybody that liked to, you could type in Fed funds rate estimate end of the year 2023. And you'll see the Fed funds rate projection by the Fed, who makes the freaking rate, is at 5.18, 5 point, something like that. Oh, it's over 5. And then you look at what the market believes the Fed funds rate will be at the end of the year. And there's a huge divergence. The market believes it'll be around 4.31, 4.29, which is a divergence of about 80 basis points. Meaning the market is already telling you June there aren't going to be any rate hikes. And we'll probably have the first rate cut in July, followed by September, followed by November. And who knows about December, but we're definitely going 75 basis points lower. The market is telling you that's its belief right now, which is why the market continues to go up. And yeah, we haven't been going up. We've been stalled in the same range. And how do I know we've been stalled in the same range? Because we've been trading 404 to 415 on the SPY for the longest time. So this could be consolidation. Volume was the 2 lowest levels, Monday and Tuesday. The 2nd and 7th lowest volume days in the last 365 trading days, Monday and Tuesday. So what does that tell me? Low volume. I told Discord on low volume days, expect big movements, meaning low volume day, you can see the SPY at 413. Now it's at 411, or it's at 411. Now it's at 413. Same thing like that. So how do we check the volume on the SPY? I hear you talking about all the time, Matt. What I like to do is by 10 a.m., I say under 10 million. And if you see SPY volume at 7.65, which has been at 5.34, which it was yesterday at 10 a.m., you're talking about hardly any volume. Now, if you want to see good volume by 10 a.m., keep in mind, big money, they like to invest right away. First 10 or 15 minutes of the market. By 10 a.m., if you see SPY volume north of 15 million, 13, 15, 18, 20, that tells you it's going to be a heavy, heavy day. And whichever way that volume is pushing the market or pulling the market, that's going to be my intentions. Now, lately, I want to talk about my secret lately. Okay? You all think you know how to invest in this market. I found the best thing. Why? Because I follow TradyTix. TradyTix, and that's whose service we use on our Discord. So why would I pay TradyTix $50 or $100 a month when I can pay our Discord $35 a month and we get so much extra? So here's what I like to look at. I like to look at the GEX Z of the SPY. Now, what does this tell me? I'm not sure it'll come up because it might be too early. This tells me going into today, 0 days till expiration options, where all the massive money is. And we have these options expiring every day. So what am I looking at? Well, it tells you 0 days till expiration. It'll act as a magnet or as support. Green tends to act as support. So if we were to break, let's just say under 411, I believe we'd see support at 410. Now, again, this is going to change. As soon as the market opens, there's going to be a number of transactions. So I will look at this GEX around 10:15, about 45 minutes into the market. Now, if I see a huge red line at 416 that goes out here and everything else is small, green, and red, then I'm going to say the market is going to be drawn up to that red line. It's very simple. Lately, it's been pretty damn accurate. Even when we were trading range trading, it was 412, 411. I'm like, okay, we're going to be range trading. Then when we went to 412, I was like, okay, we should reject here. We went to 412.20. I'm like, oh shit. The time I make a posting about how much I love these levels, I'm going to be incorrect. And then what happened? We rejected. We went back to 411.50. In fact, we sold during the day. We found support at 410. So please, if you use any feature of our Discord, this has become one of my new favorite ones to use. Okay. And we know that I love to use all these. I like to look at the net flows. So exiting yesterday, let's just see where the net flow was of the market. So net flow, market, we can talk about the net flow of the SPY as well. Now, net flow means, are people buying or selling calls or puts or what happened? So when we look at the SPY, what happened yesterday? Well, it flopped when the SPY touched bottom right before it did. As it's going down, they are buying calls. And you could see the premiums for calls still ended high, whereas the premiums for puts were negative for the SPY. So that told you, as we ended the day, they expected the SPY to be bullish. Now, when we get the pop this morning, what does that mean? It means, in my opinion, they're probably going to sell the spike. Why? Because I'm looking at the market net flow now. Understand, the first one was the SPY. The second one was net flow. What am I seeing in the market net flow? And again, I got to wait 30, 45 minutes into the market day. I'm going to look at these same charts again. So if you're part of Discord, please, you'll see me looking at them in the room. But what am I seeing? The premiums for puts for the entire market is up here. While the market was dropping, the premium for calls had been dropping substantially. So what would I look for 30 minutes into the market, 45 minutes in? I want to see if the calls increase. Are people loading up on calls again? Are the cost or the premiums for puts coming down? So that's what I want to take a look at. And simple as that. Okay, let's see if we have any other questions, comments. I've been seeing a lot of country turning away from the dollar, and we're printing money without anything backing it up. Doesn't the market maker fear? Yes, if you look at it as a whole, again, you're making common sense. A lot of people make common sense, and that's why they say the market does the opposite. Good news, the market goes down. Bad news, the market spikes up. The market as a whole is here to steal from you. If you say, no, countries are going from the US dollar, blah, 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 understand, our country, our economy is the largest in the world, besides for China. But as far as, gross domestic product, we're second to China again. But you're looking at, if you had to invest in a market, you live anywhere in the world, where's the safest market to invest in? Safest market, safest opportunity. It's going to be the US. It's going to be our stock market. So again, you have, European investors, dollar going down, extra, value for European investors. Overreaction. What was this one? Let's see what this comment was. Overreaction to PayPal, Airbnb looking for calls a couple of weeks out. Any insight? Not two companies that I follow. If we were talking about coin and coin's ranges, yes, I'm very familiar where coin pulls back to, where coin excels north. I don't know that. In fact, when I looked at Airbnb and I saw it at $108 off, 16-17% this morning, I was like, holy shit, when did it even get to 129? I always remembered Airbnb being around 104, 108, 19, 110. So the fact I can't give you any advice in that one. My meta puts for June 2nd still in good shape. Scooter Boys. I've got one. I went right on it yesterday. I went green by as much as 30%. I'm just going to look up my account right now and see where it closed at. Peace, love. And if you're on our platform, again, Love mentioned that Meta was turning bullish yesterday afternoon. At some point, stay away. And then it turned bearish end of the day. So I went from, wow, these were as low as how much yesterday? Holy shit, 480. I'm in at 531. They closed at 563. I'm sure Meta's up pre-market at 236. Holy shit. It's up $3. June 2nd puts. Yeah, I mean, I would have to see. Again, if the market wants to go gangbusters, Meta's going higher. I wish I had a crystal ball to tell you the perfect play for that. Seeing it right now, I'm kind of wishing that I exited out yesterday. And if I wanted to take the same position, I would take it today. Again, they're 230 puts. We can see a spike. We can see continuation for 2 days. We have PPI came out tomorrow morning. But if CPI came in a little light, it's estimated that PPI will come in a little light. Crocs. Let me see what we got on Crocs. June 125 calls. Let me just see what Crocs looks like. And again, not a stock that I follow. In fact, I was amazed when it moved from like 94 to 132. And went as high as 150. So that's crazy. So I understand why you're playing your Crocs. This is my 1 month chart. It was as high as 150. You're saying if you want to be bullish on earnings, it came down. It bottomed around 110, 109. It's been bought up for 3 straight days. Again, if the market goes strong this week and we close out the market with today, Wednesday, tomorrow, PPI, Thursday, jobs numbers come in light instead of heavy Friday, and the market goes up, up, up. Yeah, your Crocs calls will be amazing because you'll probably fill that gap. And if I had to give you where I think it would go to, I'd probably be a little worried right around 122. If I make it to 122 and you're making a ton of money, that might be an exit just because I'm seeing rejection there. I'm not saying we get that high, but again, bull case scenario, you have to know what your exit strategy is. With that said, I appreciate everybody staying with me this morning. We went a little long. I'm going to head over to Discord. I'm going to look at specific ranges on the SPY. Again, I'm going to have 2 different strategies, bull case, bear case. I'm going to give specifics. That's all I'm going to talk about Discord. We do have Romeo live trading today. Again, he wasn't doing it yesterday. We didn't do it on Monday or Tuesday with low volume. It was a very small range. But today he is live trading. I believe he goes live at 9:15, and he will carry you into the market. Heading over to Discord now. Thanks for joining me. Again, thumbs up, share the video if you like what I had to